Boom. By the way, could you hear that clap, Todd? I feel like my mic is stifling my clap.
There's
It's
no
stifling
clap.
your clap, Dave. That is a trouble. That is very
No,
troublesome.
by the way, it's okay because it's clap is for me.
Didn't hear
It's
it.
activating to like game time. So every Friday, 9 o'clock Pacific, we are masterminding with you guys for, Todd, is it 7 years now? Going on 7 years?
We're
So
like, we
cool.
started 2016. Summer
Gosh,
of
that's
2016.
consistency.
For
Wow.
8. Oh my God. So we're moving towards a decade of doing this. And the goal is making you successful and productive. You know, we call this the productivity mastermind. We've got two amazing guests. We have both Keith Collins, a producing leader with movement. We have Dan Rawitch, who's been our chief economist for Mortgage Coach Trust Engine for, Dan, how many years has it been?
Well, since '08 is when we started doing Rate Watch every day.
Oh my gosh. Yeah.
So awesome. I'm here for Dan.
So we're gonna have Dan give an update in the first half of the call. But Todd, anything you want to say before we you and Deb, anything you want to say before we rock this out?
Well, a couple things. First off, I didn't say it before, but I'm so excited that Keith Collins is here. It's I always get excited. It's been too long since we've had him in the community. So super fired up for what he's going to share. And, we're doing the big push this week on Modern Mortgage Summit. It really matters more for those of you who want to show up there live. We've got tickets available. We're running a deal on them. If you just go to modernmortgagesummit.com, that's for the 60 people who are going to be sitting in Bradley's studio in Vegas, in the reclining black leather chairs, watching live and sharing time with the speakers. Jeremy's bringing 5 of his people. Daniel Saw's bringing 5 of his people. Shayla just bought a ticket for her right hand. So I can just tell you it's a great one-day event, 15-minute TED Talk style. The virtual people, yeah, we want you to be there too, but the people who are flying out there need to plan ahead. And then lastly is I'm running a mastermind Friday morning, which most of the speakers will be at. And all of you who are there live are invited to as well.
Look at that lineup. That is ridiculous.
Yeah, no, check it out, guys. We'll put a link in chat. Get signed up. We're going to be announcing some more realtors. I think we're going to have a total of 6 people in the Modern Real Estate Summit. And one of the things that's cool about this, guys, is you can mastermind. You can do watch parties with your agents, and Todd actually does a video explaining that strategy. So for any branch managers watch this, guys, like you can't get a better day of content for your loan officers. And then after lunch, bring a bunch of realtors in and have a full day of action. And then of course, like Todd said, it's going to be a ballers event, only 65 seats. We've already sold over 25, I think, including the speaker seats. So we're pretty sure it's going to sell out. But the early bird special is 1,000. So get signed up and it's going to be awesome.
Kathy's asking if it's going to be good virtual. Kathy, it started out as a virtual event, and it's an amazing virtual event. And think about it as 2 events for the price of one, because you get the Modern Mortgage Summit in the morning and then the Modern Real Estate Summit in the afternoon. And so just watch my video that's on that website. It'll give you kind of some context of how to maximize it with your real estate partners.
D Bird, anything you want to say before we bring on our special guest?
Yeah, I wanted to add that for those of you who are going to host your own watch party, we have made some template links through Canva that are going to be very easy to plug and play, where you can add your logo or headshot. It'll also have a little spot where you can change event location and time depending on when you're going to host your mastermind. So we have really made it easy for you guys to be able to host and drive traffic and bring massive value to your partners, or for those who are branch managers trying to recruit and you want to get your teams in one room to watch this. If you are going to do it virtually, then just reach out to me and we'll send you that link where you can easily edit the invitation. So
all right. So Dan, we're going to bring in about 10-ish minutes. So Dan, you ready in 10 minutes to give us a kind of first quarter update on interest rates? You going to be ready in 10?
You bet. Real quickly, I just have to say, Dave, that is really a beautiful group of people on your on your summit. And is that why I'm not part of it? Am I not pretty enough? Well, I mean, what's up? If I
All
had
right,
feelings,
man.
you
It
heard.
sounds like Dan saying, hey, how come I haven't been invited to this party yet? So let's take that offline. Well, one, you're not a producing loan officer, and everybody is
Whatever.
a baller LO. So that's part of it, bro. All right. Keith, my man, you know, thank you for joining us today. And, you know, the theme is, you know, how to win in this market. If you wouldn't mind just kind of giving us an update on, you know, what your goals are for the year and what are you doing to win right now?
Yeah, absolutely. I'm grateful to be here. Goals this year are obviously revised, I think, but for me, my personal goals, and I believe that it's achievable, is going to be 14 families helped per month. The majority of it is purchase, and I think I can hit about 55 million in volume. So that's kind of the goal and everything we're building off of.
And then
We've
you
got
lead
12.
a number of loan
Yep.
officers, right? Like you have a region.
Yeah, I have 18 loan. That's just my personal production. So I figure loan officers are working, or most loan officers are going to be listening to this call. So I'm talking about more personal production stuff. But yes, I lead a region with 18 loan officers as well.
Okay, cool.
Yeah.
Cool. And,
So
and I just thought of something. I know
freshmen.
you so well, and I've interviewed you so many times. I just assume everybody knows you, but hey, there's new loan officers coming into the business, and there's someone who may not have heard you. So just tell us a little bit about your practice, and then we'll get into how you're winning.
Yeah, man. I've been doing this for, gosh, almost 19 years now. I absolutely love it. It's one of the coolest jobs in industries. I just think it's kind of ridiculous what we get to do and the money that we get to make and how we get to participate in people's future. It's awesome. So many blessings from this industry. I love it. I'm a producing market leader, which is basically an area manager for a mortgage company. And then I also produce. I think one of the unique things for me is really, you know, in 2021, I completely relocated my family from Northern California out to Nashville and restarted my community, restarted my business. I mean, I have some real estate agents that I have relationships with, but I mean, 90% of all new transactions are coming from Nashville, and I'm proud of it. We've been able to, so we've got 12 purchase transactions this month in Tennessee, and really I've only been going after the market for about 12 months. So I am, you know, I tell everybody this, I'm a 19-year veteran as hungry as a rookie. And so, and I think it's a very dangerous combination, and I'm excited to be building in a new market. You know, it's one of those things where you always ask, like, what would you do if you got picked up and got put into a new market? Like, what would you do to start all over? And I'm literally doing it right now. And it's actually been really fun to build all over again. I didn't think I was going to like it as much as I am right now.
You know, it's funny. I interviewed Sean Herrero this Tuesday, and it was called Starting Over with Sean Herrero, and it was fictitiously him sharing that, hey, if I was starting over in a new city, this is what I do. And so like this is the real starting over story here.
It is, and it's been great, and I tell that a lot, you know. So let's get into it. There's a couple of things that I think that are really working well for me. You know, I'm coming out to a market. Nashville's very interesting. There is a lot of loan officers out here. There's a bunch of $100 million loan officers. I didn't really have that in my previous market, but they're different and they're unique. But there's these long-standing relationships. You know, there's these agents that have worked with their LO for 15 years. And so I'm trying to come in and break up these relationships that are very loyal and hard, honestly, to break up. And so one of the things that I've done, I think, really well here is have a specific ask. And I think a lot of times loan officers go for like all of the business when they're trying to get new agents. And I think that's a miss. What we need to do is come with a specific ask and then really only ask for that. And I think that it makes it a lot easier for that real estate agent that has that 10, 15-year loyal relationship to say, you know what, I'm just going to carve out that little piece and give that little piece to Key. I don't feel like I'm cheating on my guy by doing that. And so for me, and I've brought this up before, but my ask is this. I'm an 18-year veteran as hungry as a rookie. I recently relocated from California to Middle Tennessee. I don't think that there's a better loan officer positioned here to be able to help your California relocations. I can empathize with them to move. We can make fun of PG&E. Like I'll be able to connect with a client that you won't in a way that you won't be able to or can't, in a way that surely your loan officer can't. So just send me your California relocations and I'll help you convert those buyers. And so that's been like my ask. And I think that's worked really well. And so for someone who hasn't relocated, like, what does your company do really well? Is your company do condos really well? Does your company do VA transactions really well? Do they do renovation loans really well? What is that big niche? The riches are in the niches. Sarah Middleton says that all the time, and I love it. The riches are in the niches. And right now, that's, I think, the way that we go after, especially bigger teams and bigger agents, is just constantly talk about one specific thing, make it seem like you're the expert in that thing, get the agent to send you that thing, do really well at that thing that is perceived as maybe difficult, and that's your in to grab the rest of the business. So that's what's worked really, really well for me.
So I want to share a parallel. When Sean talked about starting over, he literally started with, I specialize and I really love working with first-time home buyers, military and first responders. Like it was just like, boom. And then he literally said, well, I want to move to Newport Beach. And he like pulled it up on Redfin and he's like, 2 million plus houses. He's like, it's probably not the city I'm going to focus on. He kind of expanded it. And then he found markets and he's like, like this is going to be my niche. I'm going to live here. And this is going to be my market strategy. And I do believe, guys, that's a trend we're seeing more and more. I mean, I interviewed a lot of people last year that, had a core place where they were doing business. They decided, hey, I want to live here and I want to do business there. And I know a lot of people that expanded, their drive time, because you could do a lot of business on Zoom. You could do a lot of business virtually, and then you can drive 30 minutes to an hour once a quarter to meet them. So I just hope everyone took something from that. Todd, anything you want to ask or add?
Well, I mean, I just love that whole piece, Keith, because, again, I know you, once they get that first bite of the apple of Keith Collins, they're going to keep coming back to you because you do such an excellent job. And so, I think that, what you're doing and what Sean are doing, although they overlap a little bit, I mean, you're telling people, hey, you're unique in your market, just pick that one thing. And then how are you marketing that one thing? I mean, how would you tell a loan officer to get that message out there to all the real estate agents?
Deb's going to love me. Deb's going to love me. Social media. I mean, that's, I did, I did plant myself strategically in a real estate office. I was working from home and I'm like, I've got, we do all the social stuff. And I just approached a couple of the larger brokerages and said, hey, let me rent space in your office. I'll build out a studio and I'll teach your agents how to do content. And so Tuesday, Wednesday, Thursday, I'm in the largest Keller Williams office in Tennessee. So, that's very synergistic for me to be there, and that's worked. So my new agent introductions are coming from Keller Williams agents in this office and then Instagram. So, for me, Instagram has been, and honestly, it's more from Instagram. Instagram has been the number one thing that has introduced me to new people. And it's just getting relational with individuals, following them, commenting, sharing, liking, and then just asking for the business. Like there is a way with Instagram and with social media that you can just naturally take that relationship to a place where the ask is, it's like, why haven't we met yet? Not like, when are we going to get coffee, but why haven't we met yet? And that's where I'm taking the majority of those relationships. You get a book, you get the, one of those books with all the agents. Every brokerage puts out their numbers, right? If there's an agent or a brokerage that you're looking to target, Parks or Keller Williams or whatever, they tell you who the top 20 real estate agents are every single month. Those are the people that you friend, you like, you comment, you engage with, you share their stuff, and then you slowly build value and a conversation in this social relationship to the point where literally, like, why haven't we had coffee yet? We should do that. We should do that. And then you meet, and then I've got a specific game plan for that. So social media has been the number one thing that has opened doors for me, really out here in a new market. I believe, and this is true for I think all business, but specifically in what we do, the most visible agent in the market wins. The most visible loan officer in the market wins. Now, visibility looks a lot of different ways. I mean, gosh, you could do billboards and be successful, but my visibility has been social media. It's been Instagram, it's been Facebook, and it's been YouTube. And my goal is to be the most visible loan officer in Middle Tennessee, opening up doors with new real estate agents, and then having that one specific ask: California relocations.
Love that. Also reminded me of, all the interviews I've done with Dan Keller. And, from a social media standpoint, he's like, I want to be the most well-known mortgage advisor, mortgage coach in Seattle, Washington. And he's worked hard at doing that. And he's absolutely killing it. So let's do
He
this.
calls it media source, right? Isn't that what he says? He wants
does
to
he call it?
be the media source.
Mm.
You know,
Yeah.
the
It's your
number one
gated
media
community. I
source.
think about it as it's your gated community. We're building this gated community. It's the coolest freaking HOA on the planet, and everybody loves it. The gates are locked. I'm the only person with the clicker, and yeah, and we're just connecting. When they think mortgage, they think Keith, and it's a very easy way to do that on social media.
Can I add onto that real quick, Dave? So guys, what I want y'all to take note of, and I love that, Keith, you're such a doer, because I remember you and I texting and like me sending you screenshots of like daily things that you can do to prospect on social. So not just post and ghost, guys, because I hear a lot of times people will say, I only had 6 new followers, or I'm not getting any likes and comments. This is about using your social media on offense, and like you are proactively liking, commenting, starting these never-ending conversations on social, which the more you do that, the more you will often get things in return. So don't just sit and get, and don't let social use you. Instead, flip the script. You use it to prospect and to create more conversations, relationships that ultimately will drive trust and conversion.
Yeah, I think most people think on social media like it's all about what you put out there. Like, I need to create this video, and then I need to get these followers, and these people are going to engage with me, and then I'm going to get business. Like, it's completely the opposite. I was hearing Sean, you've mentioned Sean a few times. He told a story about he had this video go viral. It's like 1 million views, 0 leads, 0 opportunities from a video that went viral in, viral terms, and had over 1 million views. For me, like gifting, that would be one of the things I would ask is social media is a database, and it's an opportunity to find unique things that are happening in someone's life, and then step in such a way where you can send them a note, you can send them a card, you can send them a gift, something specifically unique, and then you stand way out. And so for me, that's one of the things that we're always looking for. Where are the opportunities to be able to gift, send that note, send a Starbucks card, and stand out? If you outvalue their lender, you will win. That's just it. That's it. And it's you can look at a real estate agent, and with MMI, you can see who their loan officer is. And if you're following that real estate agent long enough, you're going to realize that their lender is not engaging with them at all on social media, at all. And so you can go there and comment and DM and like and share, and then all of a sudden they're going to start realizing who you are, and then it's just a natural progression to a meeting.
So let's do this, because I want to get Dan in to give his update. So, and Keith has more ideas and strategies. Any questions you have for Keith, put those in chat. And when Dan's done giving the update, we'll bring Keith back in. We'll answer any questions you have on, how he's winning in this market. Dan Rawitch, turn on your camera whenever you're ready. And, there you are. Here comes Dan, and give us an update. I've seen a number of people in our Facebook group go, because you were saying that, hey, you thought rates were possibly going to start coming down before middle of the year, and there was even some possibility that this month, next month, we'd start to see a shift in rates and see them go down. And so we're looking forward to hearing what you think is going to happen for the next 3 months.
All right. I got a few slides. Is that okay?
Yeah. Share away, man. By the way, it was really good seeing you at Momentum Builders last
I
week.
know. We don't see each other enough in real time. Let's see which desk is top.
All right. By the way, everybody, give a little reaction to Keith's opening. Whatever's on your mind, whatever you thought from that first 15 minutes of fire. A lot of love. All right, Dan.
Yeah, I just got to say real quick. I mean, what Keith did is so awesome, because I can remember when I was a loan officer, how many times I thought about, I'd rather live here, but my whole life, and business life is here. That's a big deal to do that. And especially win at it. So definitely listen to what he has to say.
Thank you.
Okay. So yes, I said that rates, we talked, and I said, I think we're going to see at least, at the worst case, 5% sometime in the first quarter. Let's talk about what's changed. I'm not saying I'm coming off that yet, but I think you guys know that when I give a forecast, it's not an opinion. I mean, I suppose it is. How you interpret data is an opinion, but it's always backed by a lot of data. So when things change within that data, it can skew the numbers. I'm not sure they're skewed yet, but let's talk real quick. So let's get this one here. So what is this? This is cash that Warren Buffett is stockpiling right now. So you go back and you can see back even in the 80s, he just wasn't in cash. And each time there was some kind of a mishap in the market, Buffett was coming up with cash before the crash. He does it every single time because, again, he says when there's blood in the water, that's when you want to be swimming. So this is a record number of cash for Buffett to be accumulating. Why is he doing that? I think it's obvious. He believes the market is overvalued in virtually everything that you can measure, and he wants to be ready to buy when things come down. And again, I'll talk about how this relates to bonds as we go here. But now let's talk specifically about bonds. This is a chart of the 10-year. And you can see back in 07, 08, a double top was formed right where we are. And after that double top failed to break out, rates came down so hard, so fast. And last time I was on with you, I showed you a number of instances on a chart where once things started moving within 2, 3, 4 months, the movement was so big that people were just floored. This has the making of that. You can see clearly we came out of this channel and that's when things got real ugly. But I think that we've already bounced off this double top. And it sure seems to me that, we should continue to see at least, let me show you actually the next one. So this is a head and shoulder pattern. It's a classic trading pattern. It's also a very powerful pattern. And so you can see this rate top made the left shoulder, the head came up to that level we talked about where the double top was made. And then the next shoulder should come out about here. But before that happens, we should, in the very short run, come down to the neckline, which is this dotted line here, and see 3.25. Then we may see a bounce. But ultimately, this chart tells me we're going to end up somewhere in here. These are the Fibonacci numbers. I firmly believe that. So what is that? Somewhere between a 3% and a 2% 10-year. I feel really passionate about that. Now, what's going on with the stock market is a little bit alarming. This is not a shot at the stock market, but it's worth noting. When Greenspan was Fed chair in '94, he raised rates, what was it, like 10 or 11 times in 1 year? It was a terrible bloodbath in '94. Of course, it was a picnic compared to what you guys are going through now. At the time, we were like, this is the worst thing I've ever seen. And Greenspan said before he started raising rates, or while he was raising rates, that the valuation of the stock market was scaring him a lot, that it was putting artificial wealth into families, which is then getting spent. And when that wealth goes out of the stock market, families are going to be in trouble. So last week, early this week, one of the Fed members, she said exactly the same thing. She said not her, but she said the Fed is really nervous about the valuation of the stock market right now. Nothing can seem to hurt it. It's just like, where's the kryptonite here? But the Fed is concerned, and I believe, unfortunately, they're going to take a little pinprick and try to pull some value out of the market. The best way they can do that is with interest rates, typically. So that's just kind of keep that in the back of your mind. But also the funny thing here, not funny, but when the stock market starts crashing, every single time when you get a meaningful drop, rates follow because the Fed starts panicking too. Families start getting hurt, so he has to lower rates. So I think we're going to see a pretty big sell-off on the stock market, and I think that's going to lead to a pretty big sell-off in the bond market. But this is the Bloomberg Commodity Index, and this is one of the best measurements of interest rates in terms of what are they going to do. When this goes up, rates are going up. When this comes down, why? Because this is the price of all commodities. This is the definition of inflation if you think about it. And you can see that the commodity index keeps falling, as does inflation. But the next slide is pretty interesting because I put side by side. This is the 10-year Treasury yield in the candlesticks that you can see. So these here, and then this is the commodity index here. And you can see it really, when rates started going up, the first thing that happened was the commodity index started going up. And I talked about this a few times. I was super concerned. And then when it peaked up here, which I cut off a little bit and started coming down, that's when we really started seeing pressure come off of rates. You can see it's pretty clear. This thing is going down and it's beginning to take rates with it. So could it swing the other way? It could. But at this point, because we know that inflation is so low, this is an extended picture of the one before. So this is what's actually happening right now, in a shorter time frame. But when you look at a longer time frame, I think you can see that they should be coming down. I think so this is the what is this? This is CEO spending, capex spending, and what are they thinking about doing? And this is a little alarming. We want to see this come down, because when this comes down, it pulls rates with it. But also, this is purely a function of an overvalued stock market. If you fill my pockets up with stocks that are making money, I'm going to find ways to spend it. So I think that's what's being said here. But this is one of those things I keep an eye on and we want to continue to watch. Lastly, again, this is why, my projections haven't quite panned out yet. Just a few months ago, just end of January, the markets were expecting 6 rate cuts this year. And now, just 1.5 months later, we're looking for 3 rate cuts. So why? Because the Fed kind of changed his narrative up here. He went from being really dovish to all of a sudden just being a little bit hawkish. And I think that slowed down the train. But the Fed, I can't think of a time in history where the Fed just woke up and said, hey, I'm going to start lowering rates because I feel like it. It's always in response to something really bad. So the Fed will raise until something breaks, and then they have to pull them down so unbelievably fast. We saw some of those charts. So we may see it get a little bit. I don't know that it's going to get worse. I think it's actually going to pull back to that 3.25 level, and then it may bounce up just a little bit and then resume its path. So I still feel like end of first quarter, which is coming up fast, we should really be seeing lower rates, certainly by the second quarter. So my thoughts and beliefs have not changed. They've just been pushed forward a little bit. And Dave, I know you know this, a broken clock is right twice a day. So I'm gonna be right. So that's what I've got on
all right.
economy.
Well, go back to the Warren Buffett slide, and yeah, there's no question you're going to be right. It's a question of when will rates start going down. Someone put a question here that I thought was pretty good. I'm looking for it, but it was, do you have this in comparison to cash versus total asset? Any guess on how this would look if you were looking at, a cash as a percentage of total, net worth?
It's certainly a fair question. And I don't have that, but
yeah, but you can see the point is still made. Like the point's gonna
not in the market. Yeah, but that's actually a pretty good point. Good question.
Yeah. Hey, Kevin, good question. And Kevin, you could figure that out. Like go back and look at a stack valuation and kind of overlay it here. But I think it's still going to end up with a conclusion that Buffett's stockpiling cash, and that does mean something. So cool.
Well, this is a 30-year average on over a 30-year period, which takes in, changes the balance sheet, 48 million is the number, and it's 4x that right now.
There you go. There you go. You had an answer. Keith,
Yeah.
since you are the producer in the street, any questions you have for Dan or anything you want to call out, like that you heard from this update that you're going to use? Because I know you have slides and you have content, anything that you questions or things you pulled out.
I took images of every slide, so I'm going to go back and digest this and play with it. I was taking screenshots as he was going, so I'm grateful. There was one slide where you showed the double top and then the shoulder pattern. I think that was really cool. And what that does is, Deb, you messaged me privately here, and I'm going to kind of touch on that too. Is it's our real estate agents don't understand this stuff. And so the power is being able to take this, break it down, and show it to their agent so that they can then incorporate that with their customers, because they're on the front line, right? If we were on the front line, they'd be calling us, but they're on the front lines. That's why we're calling them. And so the power is, and this is, I think, where it kind of go. We talked about this earlier today, Dave, right? Is this, I'm working on this thing I'm calling separation marketing. And that's one of those separators. Is the ability to break down complex situations simply so that people can understand them and digest them. That's a separator, right? When you can do that, you're the smartest person in the room and everybody knows it. And I think that's the power. So I'll be going back through watching this, listening to it, and I might even send down a couple of messages there. But I think that one slide, that was the visual slide that shows, like, look, this is where it was, here's where it's going, this is where it has the opportunity to go. And what that means to you is, I think that's the most important thing when you're talking with a real estate agent or customer. You show them these things, what this means to you is, because you can't let them form their own opinion, because it might be completely wrong. Yep. And if they don't have an opinion because they don't understand, you need to let them know what it is.
Love that. Dan, are you going to share the slides with us like you usually do?
Sure, absolutely, of course.
So I'll put these slides in our Facebook group within a couple hours. If you go to Trust Engine Mastermind, Productivity Mastermind, these slides will be in the documents. Dan, I know you got to jump at some point here. Anything else you want to share? Or also, I know you talked a lot about, your Options University program. I want to make sure people know about that, but any closing thoughts or anything you want to share about what else you're doing?
No, I think, and everybody probably would rather hear from Keith. I think I made the points I was looking to, and in terms of talking about what I do, you tell me when and if, and I'll be ready to talk about it.
Yeah, go for it. Before we bring on Keith and focus on that, tell everybody about Options University.
Okay, so we do a couple of primary things. One is we teach people to trade options, and we also give a really deeper market depth knowledge. And to that point, like, there's a stock called TLT, which is actually a fund that buys treasuries. So it tracks exactly like interest rates. When interest rates go up, the price of that goes down, because there's always that inverse relationship. And I remember back in 21, 22, I started telling the loan officers that these are really good times. There's 2 steps you have to take now to protect yourself. Well, 3, with the third includes what you shouldn't do. What you shouldn't do is buy Lamborghinis, Maseratis, and anything that you have to finance. You shouldn't do that. But secondly, is you should be investing in something that is going to protect your career. So if you think about it, when loan officers are killing it, then the prices of bonds are just horrendous, right? Because as rates go up, when loan officers are killing it, then the price of bonds is it's way too high. So if you go in and you start selling short these bonds, which isn't easier than it sounds, as rates begin to go up and your career slows down, the price of these bonds is going to skyrocket. And so we have loan officers that literally made enough money to where they can be relaxed through this whole point because they hedged. And the best comparison I give you is oil companies. Do you think oil companies sit on thousands and thousands of barrels of oil and worry about the price of oil every day? No, that would be terrible. They need to know the price of oil is what it is and it's not going to change. So they hedge. So it's the same thing. There's a perfect hedge in the mortgage industry with bonds. So I think probably of anything we've done in the last couple of years, that's been a really big thing. Okay, so we teach people to trade options. We have a 30 module course, and it's pretty good. It's designed for people with zero knowledge. And once they know what they're doing a little bit, then they trade live with us. We literally trade live with our members twice every day. We very, very rarely have losing days because I developed an indicator called Flight Station. It literally tells us when to go in and when to come out of each trade. It's super accurate. So, and if you don't have time to trade live with us, we also do about 4 weekly swing trade picks. And I don't know when the last time we had a loser was. We do really well with these picks. So that's the options program, and it's very successful. It's growing really fast. Our members seem to be really happy. It's a great community. And then the other side of that is if you have zero time to trade, we sell robots. We sell auto trading robots. These bots will literally trade for you. You don't really have to do anything other than turn it on sometimes and turn it off sometimes. Because like sometimes we'll tell our members, let's turn off our bots, before CPI comes out. But our bots, I'll just show you a couple stats real quick. Sorry, this is probably taking more time than you wanted.
Well, what I love about the bots is you don't have to do anything, Dan. You guys set them up and they do all the stuff for you. So for me, it was like the game changer because the options thing stresses me out, right? And I'm like, I got a job, and I do know loan officers who are literally successfully training in your options group before they start their mortgage job, and then they go do their mortgage job. So I know there's such opportunity there, but I love the bots just because it's on autopilot. I mean, it's set it and forget it.
Yep, all my daughters are in bots. And my oldest daughter's bot is just killing it. She was the first one we installed. She's up over 300% since September of last year. This is our newest bot, Precision. We started this thing. This was an experiment. We have years of data on this bot, but we wanted to know, how does it work with a small cash account? So this account was opened with $1,500 on January 25th. And there's now, where are we? About 3,400. But that was on Sunday, I showed this number. Today it's up 167%, and it just hit the $4,000 mark. $4,000 for a $1,500 investment. And I don't think you guys would think I would tamper with numbers, but I got to tell you, when I wanted to, I couldn't. These numbers are fed directly from a company called MyFXBook, and it goes into our brokerage account and it pulls up the data. So this is about as real as it can get. And then this is just showing you in that short period of time, this bot's taken 781 trades with the 77% win rate. And every dollar that it does lose, so the 23% of the time it does lose, it loses $1. And 77% of the time when it wins 271. So that's called the profit factor. And that's pretty important. This yesterday, this was last Sunday. We closed the month at 108% gain. In the first 5 days of March, awesome. Last days of January, we were up at 28%. And then last but not least, this is another one of our bots, Aviator. This is about 6 years of data. The bot took 6,000 trades with a 78% win rate. So Aviator is also a great bot. All our bots are good. I just tend to usually highlight some of the newer ones. But that's my spiel. If you want to know more, you could just send me an email, dan@universityofoptions.com. If you mention Dave, Todd, or Trust Engine, when you send me the email, then we have a discount for you. But you got to make sure and tell us where you came from.
Yeah, and use.
Can you put that email address in the chat?
What's that? Put
that email address in the chat.
Yeah, we'll put the email in the chat. Dan, you go ahead and stop sharing. And again, email Dan. I mean, the testimonial I have for Dan is my son, Jack Savage, who's a senior at Chapman University, took his options training last year, and Jack makes quite a bit of money day trading, and learned it from you. And we're currently in the process of getting one of Dan's bots set up. And I think Todd has a bot or two. So check it out, guys. Dan, you Oh, you have five of
bots.
it? Five?
Six
Six?
bots.
6 bots.
Six
Wow.
bots. Listen, I don't mess around. I don't mess around
You're
with this
all
kind
in,
of thing, you know?
brother.
Yeah. So, wow, I didn't realize you were up to 6 bots, man. Yeah, you
Look
got to
at
do some
Dave, he gets
mentoring of
competitive.
Jack.
It's so funny.
Yeah, make sure you let Dan know you heard it from here. Dan, I couldn't be more grateful for you, bro. Thank you for all the value you bring to the community. Thank you for helping make my son money smart. You know, that's another thing. He just, in addition to a skill that he learned, the kid's money smart, and you're a big part of his story. So thank you for that.
Yeah, thanks. As you know, you and this community have done more for me than anything in my life. So I appreciate being part of this.
Yeah, well, grateful for you, man. So Dan, you can stay all the time, or you can jump, whatever you got to do. I know one thing for sure, whether you stay or go, you're going to be watching the markets. But thank you, brother.
All right. Thanks, Dave. Appreciate it so much.
All right, man. So Keith, you know, we got 20 minutes left. Bring some fire. Like, you know, give us a list of things you're doing to win in this market.
Yeah. So, I mean, classes are one of the biggest things, you know. Again, I'm coming to new markets, one to many, marketing the heck out of them, and just providing really great content. I taught a class last week and I had over 55 agents show up to the class. That was why I believe we're on the largest buyer surge. We're on the doorsteps of the largest buyer surge our country's ever seen and may ever see. We got like 55 agents show up, 55, 60 agents show up to that. So it was a home run. I'm teaching 2 classes.
What was the headline? By the way, what was the headline?
It was, what was it? It was why I believe we are on the largest surge in buyer demand our country has ever seen.
And then what, give us like an outline, and you know, I know you've been using.
Yeah. So, I mean, the outline is basically, I mean, if I were to wrap it up in a nutshell, you know, the Federal Reserve reports the average age of the first time home of a buyer entering in the marketplace. And that age is roughly 35 years old. And so what I did is I basically showed how many of them we have and how many we have entering that age over the next 8 years. And then I tried to draw a parallel, and then I draw a parallel to the baby boomers. The baby boomers were a large generation that entered in the U.S. housing market at their age, and they fueled the U.S. housing market for 2 decades. And so I share the numbers, and then I go into inventory, right? Like we're 1.6 million.
By the way, did you
short.
have I don't know if you use this chart. This is from First Home IQ.
That's it.
But it's
a similar
showing,
slide. Yep.
It's a similar slide. Yeah. So guys, like, look at this. Like, this is a little tsunami.
It's a problem.
People.
And yeah. Go, buddy. I'm sorry. I didn't mean to interrupt you.
No, you go ahead. I wanted to give you a visual aid.
Yeah, no, I mean, I could pull up a canvas shot and show you, but I mean, we're going to have a massive buyer surge, and then we don't have housing. I mean, we are literally, you know, people don't realize this, I think, a lot, but homes coming to market come 2 ways. One, we have people list their homes. That's not happening because everybody's house hostage. And then 2, builders build it. But when a builder is going to build a home, like, we know what's coming 6 years down the road. Like, a builder doesn't wake up tomorrow and then go vertical on a house, right? There's a whole process that gets reported. And so we know what's coming. What we're bringing to the market in the next decade is a similar amount of homes that we brought to the market in the 1940s. And in the 1940s, we had 130 million people, and now we have 350 million. So that's kind of ask the synopsis of it is we have a huge demand coming and we don't have homes for them. What's going to happen? Right? So I had a ton of people show up for that. That was awesome. But classes are my big win. I mean, next week, I'm teaching 2 classes. One's YouTube for real estate agents, and the second one is don't let your deal die. Save your commission with creative financing. Today, I will text over 700 agents about those classes, and inviting them to the class. And so that's been the huge thing for me. If you're going to teach a class, it has to have an amazing hook, right? You have to have really great content. You have to market the heck out of it. And then once you have momentum, you have to run with that momentum, because then they compound. And if you feed them, they'll come. So classes for me is what's really, putting me in front of a lot of people. And then, you know, the thing that I'm really playing with here, especially in a new market, is what I'm calling separation marketing. And, you know, there's an interesting thing that when I sit down with a one-on-one with an agent, they never ask me about. Like never, ever, ever, ever do they ask me about what I do post-closing with their customers. All they focus on is the 45-day window between new lead and getting my commission check. And that's okay. I get it. That's how they're going to get paid. But that's not how they're going to get paid over time. That's just that one individual commission. And you know what? Like the standard is too low. The standard is, do you communicate well? Do you take care of my clients? Do you have good interest rates? And do you close on time? Like that's been the standard for 20 years, but that's still their standard. And that's the standard that they're holding their current loan officers to. We've got that down. I can show you over 400 reviews on 5-star reviews and how I've got that down. But what if I was able to come in and help you find an extra 3 transactions a year because I focused on something different? And that is, what do we do with the clients after we close? That's where the impact is. And so I show them all the stuff that we do after close. And then what I'm adding to this, and then we were chatting about it today, I heard you, so we did a dive. I didn't have go to the Momentum Builders. I couldn't make it, but my team did. I had like 8 people attend. We did a deep dive this Tuesday about what they learned. And one of them mentioned something that you had said, and I think it's really powerful. It's something like, and I might botch the statistics, so you help me here, but 90% of loan officers are using the loan estimate from freaking 1989. 90% of loan officers are using the loan estimate from 1989. And here's what's really interesting. This is the other thing that I've never been asked by a real estate agent maybe once, but I can't remember ever. What does your buyer presentation look like? Like if I were to get in a room with the real estate agents and I were to ask, how critical is your buyer presentation or listing presentation to you in your business in terms of converting that listing? How much time, thought, and energy have you put into your listing presentation? I'm sure it's a lot. But never once do they ask their primary conversion partner, what does their buyer presentation look like? How do you engage with my customer as you talk about the most complicated thing that they're probably ever going to do? And that is the finances as it relates to the mortgage. And I would say 9 times out of 10, their loan officer sucks at it. And it'll be very easy for us to separate ourselves from that and show them how their primary conversion partner could potentially help them convert more buyers, because confident buyers make confident decisions, and confident decisions get people into contract sooner. Right? It's massive. So from a separation marketing standpoint, those are the 2 things that I'm really focusing on, because loan officers just don't do it. And real estate agents suck at it as well. Is what are we doing in post-closing to help you find 3 to 4 more transactions per year, and showing the customer how I will help them convert more buyers just by sending those buyers to me, because our process, our integrated, curated process with customers, showing them all of their numbers, is way better than anything that their loan officer is currently doing.
So 2 things. So 1, bro, we need to get you on an interview and we're going to call it separation marketing with Keith Collins, and spend a whole call just breaking down. I mean, that was incredible. Doug Gottling said, just offered you to speak at Momentum Builders next year. So I'll let you and Don take that up offline. I do want to bring to life something you said, because, this was from my slides, Chris and I's slides at the Momentum Builders conference. And first of all, we showed a minute ago that slide showing this tsunami of buyers coming into the market. And guys, this is the wealth gap in America, renting versus owning. So when you look at the data and the demographics, the wealth gap is just going to continue. And I think your team, they brought back that, quoting rates like it's 1989. It came from this, guys, because I started in 86. And the LOS was invented in 89. And this was innovative. This was a big deal. But when you look, this is from right now. This is a typical fee worksheet, and it's 2024, and it doesn't look much different in this. So if you're gonna do separation marketing, it's never been more important that you're delivering a transformational experience with Mortgage Coach and Trust Engine. It's never been more important that you're showing people what homeownership looks like in 3 years and 5 years, and you brought up the fact that there's all these household hostages. Well, if you're going to free a household hostage, you're not going to do it because the rate that they're getting today. You're going to get it because they're going to look at what that move up decision is going to look like over 3, 5, and 10 years. So So this whole concept of going from, you know, fee worksheet loan officer to data-driven mortgage advisor, never been more important, which I don't need to ask you if you agree because you're a grandmaster.
It's
times
massively
two.
important. I mean, gosh, we have the ability to fundamentally change the financial future of a family, and we do it over and over and over again. And we do it with a screenshot of an interest rate. You know, I've seen lenders quote just like they literally just show people the entire rate chart. Like, here, you pick. That's terrible. We have the opportunity to help people and do different. And then really help our real estate agents. But I don't think that we don't show them the importance of this. We don't talk about the importance of this, and maybe we don't because 90% of the industry is not doing it. So I guess that makes sense. But what an easy way to separate yourself with something that's really already done and built. So I love it. The other thing, if I can,
Hey, real quick before you
go.
go, Todd or Deborah, anything you want to ask or say before Keith shares his next thing?
You know, we got 9 minutes. I'm going to let Keith share his next thing, but I do have a question if we have time.
Okay, Deborah,
Yeah,
anything quick before
I'll
Keith
wait till
shares?
the end. I'll wait till the
Okay.
end.
Okay,
people
cool.
talk about, okay, I'll hit this real quick. I actually had a coaching session with one of my loan officers yesterday. And this is one of the things that we dove into, you know, look, like it's 150% effort for 50% results. Whereas the last couple of years, it's been 50% effort, 150% results. So we have to get, we have to get like really focused on our daily activities. You know, you're saying you're working 8 hours. Are you really working 8 hours? Right. What things are we doing that are extremely inefficient? And I think one of the easiest ways to break it down is look at your hourly rate. And I talk to loan officers a lot, and they have never thought about that. They know what they want to make in a year, but they don't know what their hourly rate is. So if, let's say, for example, your loan officer wants to make $500,000 a year, you want to take a month off, your hourly rate's $280 an hour. If you attend a 3-hour event, you better make about $800. So the question is if, and she was telling me, tell me your day. What did you do today? Well, I did this, I did this, I did this, and I went to this event. I'm like, okay, cool. Did you, and we went through it. Would you write an $800 check to go to that event? No. Then why did you go to it? We have to look at everything that we're doing and making sure that we are earning whatever our targeted hourly rate is at that thing. And if we're not, we have to eliminate it. You know, she's been going to this event every week for 3 hours for a year. And you have to get 8 transactions a year from that to earn your hourly rate. Have you done that? Maybe I got 2. You have to eliminate it. So I think that is something that we just have to constantly put in our brain is calculate your targeted monthly income, your targeted annual income back into what your hourly rate is. And when you look at your day or you're scheduling things out or someone's asking you to do something, do I have the opportunity to earn my hourly rate if I do this? If you don't do it. If you do, you need to make sure that you're extremely intentional with your time there, right? Just showing up is not enough in today's market. You have to walk away with the opportunity that's going to generate the hourly rate based on the time that you committed. I think that's critical now.
You know, I think it's a great analysis. I think it's a great analysis. And I love the hourly rate piece. I was talking to a loan officer on our team yesterday. And he just told me how hard he's working. And I'm like, okay, well, you know, kind of the same thing. Are you really working 8 hours a day? And he's convinced he's working 9 hours a day. And then I kind of just helped him break it down, right? He's got to work on loans. He's got to call realtors. He's got to follow up on his leads, and he has to call his database because Dan Rawitch just told us rates are going to come down. And we all know there's refinances in our database that are already getting hammered by other people. And so I love the additional filter of putting on that hourly rate. I think that would probably be a good thing for me to add to the conversation I had with them yesterday. But ultimately, I just said, hey, you also have to track your time. So you're kind of talking about that. I just said, hey, you know, of course, he's a win by noon user. I'm like, all right, just draw a line in your planner of what you're supposed to do and what you actually did. And at the end of the day, add it up to see where you need to tweak that a little bit. And I think that's really it. I mean, we all have to look and do the things you're saying, Keith. We all have to look back on it, but I think you all need a coach right now to tell you to do it. So you just heard Coach Keith tell you that. Coach Todd's telling you that too. And I'm sure the rest of the coaches here will speak in as well.
Well, just to give my 2 cents, we recently did a masterclass with the nerd, and the thing that we focused on was conversion rate. So we took 100 families, and at a 15% if you wanted to help 100 families for the year, at a 15% conversion rate, you would need about 3 credit pulls a day or 15 a week. But if you increased, so if you did what Keith is talking about, and let's start with the critical conversation with the borrower, like nail that with the TCA, make sure you know how to articulate that to not only the borrower, but then to your agent partners, so they know how you're selling the client. But if you could increase just 10% conversion, now still working the exact same leads, quote, but if you get a 25% conversion rate, now you only need 2 credit pulls. And so Denise started measuring this conversion, and you could get to 60% conversion rate, and then you only need 1 credit pull a day. So, it's just something to think about, that maybe if you just spend a little bit of time, extra time, whether it's post-closing, like Keith said, or at that initial consult, imagine what that would do with the business you're already bringing in. Because a lot of times what I have found is loan officers have these buckets that they're filling with water, and there's holes in the buckets, and it's just, you have business falling out. So do your agent partners.
Yep. 100%. I mean, and your P&L is going to look a lot better. I mean, I'd rather pull 1 credit pull for the same amount than pull 3 at $200 a pop.
Right.
So much gold, guys. So a few people asked for slides. One, I'll put Dan's in our group. If anybody wants my slides, make sure you're part of the Savage Insights Mobile Club. Text, and I put it in chat, 949-799-0837. And one of the things I'm going to be doing is every Monday, I'm going to start posting on LinkedIn Monday morning, a sales leadership post that's going to be my attempt at, if I was head of production for a mortgage company or head of production for the mortgage coach community, which I kind of am, like, what are the things you need to do? Like, what are we going to do this week? And one of the things I want to get everyone to do, especially after what Keith just said, you need to be an absolute master ninja at delivering a rent versus own analysis, and that's not a linear thing to do. Like, it's going to be one type of rent versus own analysis if you're talking to someone in their late 30s or 40s. It's going to be very different if you're talking to someone in their 20s and they're going to need a house hack, or they're going to need to do an ADU. They're going to need to, Airbnb a bedroom. Like, they're going to need to, do unconventional things. You need to become a master at helping people to do that. And then next week, I'm going to focus on how to help people make the move up decision. So Keith, I got a couple taking action closing questions, but anything you want to make sure gets shared before we run out of time here?
Yeah, I think if I were to add anything else, it would be stop hiding behind your email and your text. This is, I mean, you've got a beautiful email. That's great. People aren't reading it. These are things that we had to do through efficiency in 2021, 2022. These are things that we have to get rid of in 2024. You have to get on the phone with your customers. You have to do screen shares. You need to be meeting with them to go over these complicated situations. A beautiful email does not get it done. And anytime there's friction or a client's asking a question, it's not responded to in text. It's, hey, here's 15 minutes, grab time on my calendar, or can I call you really quickly to go through this? Those things have to be done. We cannot hide behind our email and our text right now.
Love that. So here's my closing thought, and then we hand it off to you, Todd. This webpage, trustengine.com/10x is really going to be my base camp all year long, where I'm updating out of all the interviews I do. Like, if you were only going to watch 6, make sure you watch these. If you wanted to win with Realtors, and I'll be updating these, like, actually the one I'm going to do with Keith called Separation Marketing, just might make it. I'm going to be adding a button here that's going to be called the 10X Sales Rally Playbook, because I just wrote a playbook this released this week on Instagram. And while I wrote it, because I've been speaking a lot of sales rallies, I wrote it so that sales rallies would actually improve sales habits and sales skills that create results. This applies like to this call right now. Like, literally, we were on stage, Keith gave a couple 15-minute TED Talks. And now what are you going to do? Like, if you're a branch manager, what are you going to do to put this in action. And I came up with week 1, week 2, week 3. So we'll be referencing this. Todd, why don't you close it out, win by noon style?
Wow. Well, so tons of great information, right? We had 3 parts of the call. We had Keith kind of launch us what he's doing as now he's kind of been there a couple of years, but it kind of newly in his market and how he's got 90% of his business, 14 loans this year a month that he's intending to do by being excellent with his social media, by leading classes, and then ultimately by separating himself from other folks. So I would be rewatching both of his portions. Dan told us what we've been talking about since the fall. Rates are going to go down. If you're not calling your database, then guess what? Someone else is going to get that loan because you have to call them before rates go down. We had that little head fake during December, right? The head on the head and shoulders thing. And, or maybe it was the shoulder, who knows, whatever it was. But ultimately, you all had your clients getting harassed then, and you've already lost some of those clients. And so be thinking what you need to do there. And then, Keith said his number 1 way he's getting loans is Instagram. So therefore, I'm going to hand it off to none other than Deborah Bird to close us out with her Instagram closing thoughts.
Use it for prospecting, guys. Make sure you're following the people that send you business. I can't tell you how many loan officers we get on their account to get them set up, and they're not even following the people and engaging with those who are already sending them their business. So every time you go to pick up your phone to consume, here's the new habit I want you to implement. Send 5 DMs to partners or create 5 comments on other accounts. That's like a genuine comment before you ever allow yourself to just consume. So produce and interact before you consume.
All right, guys, we'll put links in chat. Great call. Keith, you the man. I'm looking forward to separation marketing and completely unpacking that with you. We'll get an email out to you to schedule soon. Today. Have a great weekend, everybody. Great call. Give us a reaction as you leave.
Deb.
What
Bye.
did you think about today's call? Let's give Keith some love, everybody. Oh, there we go.
Thanks, y'all.
Party on.
Take care.